Insurance can be as simple as understanding the two pieces that you have to have covered. There's technically three main sections. There's coverage for you, coverage for others, and coverage for your vehicle. The easier way to think of it is there's two main pieces. There's liability and physical damage or property damage. The liability is broken up into two pieces. That's where it separates the coverage for you and coverage for others. Before we dive into that, let's determine what is liability. It's hard to explain because it's essentially anything you're liable for. So when you cause an accident or you're the one at fault, you're liable for this amount of damage or this amount of issue that you have. Now, all states say that you are 100% liable depending on the state that you're in. Some are a 50-50. If you go 51% or more at fault, then you're considered the liable party. Most states do what's called a shared or a comparative negligence, where it says if you're 51%, you pay 51%, or your insurance pays 51% of the damages. Then the other person's insurance pays the 49% that they were liable for. So that's the easiest way to think of as far as the liability coverage, but what coverages are we talking about? There's two parts to the liability portion. There's bodily injury, where if you injure somebody, that's the amount of medical that your insurance will pay for their medical expenses. So if you injure someone and let's say you had $100,000 worth of coverage, it's going to max out at $100,000. Most policies get a little confusing because they're called split coverages, and I'd say 95% of the people have this version of insurance to where it's $100,000 per person and then $300,000 per accident. In Michigan, where the liability isn't expensive, it's $250,000 on most common and $500,000 per accident. In Texas, a lot of people carry the 100, 300. It just depends on the cost that risk is in the location that you're in. There's a lot of factors. I'll link a video that goes a little bit more in depth on the factors of insurance that cause the rate to go up and down and fluctuate. But in general, that liability is going to pay that amount per person and per accident if there's a total for that claim. That second piece is the property damage. The property damage is if you damage somebody's car, house, or you hit a pole, anything that you damage that's not your ownership, that you don't own, that's covering that. Now, we're not covering you. We're only talking about the liability for others. So if you damage someone's house or damage someone's car, that's the limit of property damage. If we stick to that 100,000, 300,000 rule or the 250, 500, commonly you'll have at least 100,000 for property damage. If you have lower limits than this, it might make sense to find out if that's enough to protect you. That's kind of a different conversation that you should have with an agent, whether you have enough income or you have enough assets that you want to protect more or less depending on where you're at in your cycle of life. By the way, if you are shopping for new insurance, I'll put a link in the description below where you can work with a local agent. The nice part is most of these are independent, so they can shop multiple companies for you without having to make 100 phone calls. You just give them your information, they shop it around, find out which companies have the best fit for you, and then go from there. Now let's play the reverse Uno card, because the liability and the property damage can work in your favor as well. So that's the coverage for the other people. Now we want to cover ourselves in case something happens. There's a lot of uninsured motorists out there, more than there ever has been, especially since the rates have kind of creeped up over the last 3 years, which makes for the argument that you want to cover yourself, if not more than you would normally cover in general. That's uninsured motorist or underinsured motorist. So you've got uninsured in case that person, like we just said, didn't have insurance. They hit you, you got injured, they took off, you never found them, whatever that scenario is, you're going to cover your medical and medical of people in your vehicle. Commonly, you're going to max it to whatever you carry for bodily injury. So if you carry the 250,000 bodily injury, you're probably going to carry 250,000 uninsured motorist bodily injury for yourself as well. Now there's kind of a sub piece called underinsured motorist. That's where if you know you're going to carry a good coverage, so if we want that 250,000, or let's say you want 500,000, you're just going to make sure that you're covered correctly. And that 500,000 is going to cover the difference. If somebody had a lower than that, let's say someone carried 50,000, but you wanted 500,000 and they were at fault, well, their insurance is only going to pay 50. You'd have to sue them, go after them, and odds are if they're on a budget and it's just really tight, you're probably not going to get much, if anything, out of that person in a lawsuit. Pointless to go after them, but what you can do is protect yourself beyond the limits that they carry. That underinsured motorist covers the difference. Theirs covers the 50, yours covers the rest up to the limit that you set. In this scenario, we said 500,000, so your insurance is going to cover up to 450,000 to cover medical for you if you get injured or anyone in your vehicle. Same thing, Uno card is still out. We're reverse covering our vehicle. Not all states do this, but there are a few states that have uninsured property damage or underinsured property damage. That's you covering your car in case they don't carry enough or any insurance. So if they hit and run, whatever the case is, you technically had full coverage, you'll have the coverage on your vehicle to cover the excess. Now, Mark, why don't I just carry full coverage? Well, that's why each state does them differently. The majority of you that are watching this, I'd say 8 out of 10 people are going to have the standard full coverage. It's technically a word made up, and we'll go into it in part 2. We're going to dive a little bit further, but the full coverage piece is just essentially you covering your vehicle in case something happens. In the state where I mentioned you have to have your uninsured and underinsured property damage, that also is a little bit different because you've got full coverage if you cause the accident, but you don't have the full coverage if they cause the accident. If that makes sense, it's dependent on the state. Your agent will go a little bit further in depth. If you are curious about that, let me know what questions you have in the comments below, and I'll try to dive in a little bit further. And the second piece is the property damage, the physical damage of your vehicle. For those of you that want what's called PLPD, that's personal liability, like we just talked about, and property damage. That's the coverage that you have to carry because the states require it. In 99% of the states, there's a few states that you only have to carry some small coverages. No one ever does because it's pointless, but there's options there. So that leads us into that second piece, which is covering your vehicle. For those that don't want the basic coverage, all of the things that we mentioned in that scenario, you're gonna cover your vehicle, especially if you have a loan, they're gonna require that you cover your vehicle in case of an accident. So that property damage typically comes in 2 pieces. You've got comprehensive, which is theft, vandalism, you hit a deer, any type of animal counts as comprehensive. And then you have collision. That's if you have an accident, if you hit a house, you hit a car, you hit a curb, anything that collides with your vehicle. Could be a tire fell off someone's car and it hit your car. That's a collision. That's going to cover your vehicle. Now there's pieces to that you can do, which is a deductible, and your deductible determines how much of the cost, we're talking more price here, of your insurance to your cost of out of pocket. So if you're going to pay your deductible, that's how much you're paying out of pocket, saying, I'm going to pay the first $500 of this claim, and because I'm doing that, my insurance will lower the cost of it because I'm paying some of it. It's kind of like if you got a loan, they give you a better interest rate if you put money down. It's your good faith, I guess you could say, in the claim of knowing that you're not going to want to file a claim as much as possible, because if you have that on the hook, they're not going to be on the hook as well. Now, you can raise or lower that deductible. There's $1,000 deductibles. Some people have $2,000 deductibles, and depending on the state that you're in, that can make a big impact. Those are the main 2 pieces that you have to think about with insurance. There are extra parts if you want to go more in depth and go over the actual details of what those pieces are. I've got a Car Insurance 101 video that goes further in depth than that. If you're just shopping for new insurance and you're trying to get the best deal, you're trying to find the best discounts, I've got my discount video here that will help as well. I'm Mark with Think Insurance. I'll see you in the next one.